Stop scrolling for a second. I need you to imagine something darker than any movie you've seen. The next financial crash. Red screens, panic everywhere, economic collapse plastered across every news headline. Most people see fear, ruin, and an end to their retirement dreams. But here's the crazy truth they are not telling you. The biggest crashes in history weren't disasters. They were the greatest wealth transfers the world has ever known. If you think the system is about to break, you're half right. It's not breaking, it's being reset, and you have a chance to not just survive it, but to get seriously rich from it. Before we dive into the 3 biggest warning signs flashing right now, and what Warren Buffett is quietly doing about them, do me a favor. Hit that like and subscribe button. This channel is about preparing, not panicking. Let's make sure you're ready for what's coming. Look, history doesn't repeat itself, but the patterns, they're impossible to ignore. Think back to the Great Depression in 1929. Total chaos. But the few investors who bought assets when the blood was literally running in the streets, they set up generational fortunes. When the dot-com bubble burst in 2000, Netflix, Google, and Amazon stocks were practically being given away. And 2008? That felt like the world was ending. Yet that was the absolute starting line for the biggest bull run we've ever seen. Why does this keep happening? Because crashes don't vaporize money. They move it. They snatch wealth away from the emotional and the unprepared, and they place it directly into the hands of the rational and the strategic. The question isn't whether the system will break again, it's a certainty. The question is, which side of the transfer will you be on? We're standing at the edge of the next one right now, and the warning signs for a major financial reset around 2026 are everywhere. First, valuation is insane. The Shiller-Cape ratio, a fancy term for how expensive stocks are compared to their actual earnings, is at its second highest level ever. The only time it was higher was right before the dot-com crash wiped out trillions. Everything is priced for perfection, and perfection rarely lasts. Second, debt is out of control. Consumer debt, corporate debt. Everything is leveraged to the hilt. We've been living in a party funded by cheap money, and the bill is about to arrive. When interest rates eventually spike, all that cheap debt becomes a crushing liability. And while the talking heads are telling you to relax, look at what the smartest money in the world is doing. Warren Buffett's Berkshire Hathaway. They are sitting on a mountain of cash, hundreds of billions, the most the company has ever held. Major hedge funds are quietly rotating out of flashy, overvalued tech stocks and into solid, defensive assets. They're not panicking. They're simply clearing the deck. They know a deep discount sale is coming, and they want every penny ready to spend. If the rich see crisis as an opportunity, we need to completely reverse our normal instincts. You have to think like a buyer, not a consumer. Here's the simple 3-step playbook for the coming chaos. When the market is euphoric, everyone tells you cash is trash. They're wrong. You need to be accumulating liquidity right now. Cash isn't for safety, it's for purchasing power. When everyone else is forced to liquidate their assets at fire sale prices just to pay bills, you're going to be the one with the ability to buy real estate, stocks, and businesses at 30 cents on the dollar. You can't do that if you're leveraged up to your eyeballs. Get rid of toxic debt. Debt is the chain that forces you to sell at the worst possible time. Instead of chasing speculative trends, focus on true value. Look for companies with strong balance sheets and essential services. Look for prime real estate. These assets will retain their utility even if the price temporarily drops. When the tide goes out, quality always wins. This is the hardest part. When the crash hits, the media will tell you it's the end of capitalism. Your friends will be terrified. Every instinct will scream at you to preserve what little you have. This is when you must be a disciplined machine. The investors who doubled their money during the 2008 crash weren't lucky. They simply had the steel to act when everyone else was frozen by fear. That is where fortunes are made. History shows us that assets bought at a 50% or 70% discount create exponential returns, setting you up for life. The 2026 crash isn't coming to destroy your future. It's coming to create it, but only for those who are prepared. Stop worrying about the noise. Start focusing on the plan. The wealth transfer is already being set in motion. Don't be a casualty. Be a collector. Now tell me in the comments, what is the first non-essential expense you're cutting this week to build your war chest?